The S&P 500 remains sandwiched in this zone between 6,000 and 6,100. We've been trading in this range for the better part of 2 weeks. That despite the big gap down from the DeepSeek AI news a week and a half ago, as well as the threat of more tariffs from Trump. The market, however, seems very resilient to any of these factors, with every dip essentially being bought. And so this has formed a nice consolidation range right here at the top near all-time highs. And because the market has held up so well, we see market participants coming into the options market. The purple bars here on our chart represent gamma exposure data. This is absolute gamma exposure on a net basis. And we continue to see gamma exposure growing at these higher strikes, basically indicating that market participants have increasing interest at these higher strikes. In particular, we are watching the 6,200 strike in our community Discord. That is our next immediate target once we break above this resistance here near 6,125. So a break above that level and 6,200 is going to be the next target. We're playing various option strategies aiming for that target. By the way, if you're interested in following along as we trade and make moves in our portfolio, I'll put a link down in the description below. You can check out our community Discord absolutely free. So we saw the most recent dip back on this Monday was ultimately bought, and we continue to grind higher. Gamma exposure continues growing at these higher strikes. The one thing I will note is we did see pretty large volume today in the options market at the 6,000 strike. This is over 150,000 contracts on the S&P 500. And so a potential path scenario is in the next couple of trading sessions, we could see a pullback, which would be due after this really strong 3-day run. So in the next couple of days, we could see a slight pullback back into this 6,000 level before the next leg higher into the middle towards the end of February. Ultimately, though, we think after some consolidation and a potential breakout of this zone, the 6,200 level is a high probability target heading into the early part of March. Let's drill down into a couple of other metrics. Our historical GEX on the S&P 500 shows a very narrow range over about the last week and a half of trading very close to the zero gamma exposure level. We measure this at the end of every day just to get a sense for the trajectory of the gamma exposure for each individual index, ETF, and stock that we track. So in this case, the S&P 500 has been trading very close to the zero gamma level, and that basically just confirms the trading range that we've seen over the last couple of weeks. Moving over to the left side of the screen, our zero DTE GEX flow. This is a tool where we can track intraday zero DTE movements for the most important strikes for each underlying security that we analyze. And you can see both the 60.55 and the 60.60 level were the keys to this market from the early morning hours. Both of these strikes started off pre-market representing the largest positive gamma exposure concentrations, and we were tracking this throughout the day, and it really started to take off just after the 11 o'clock hour, back when the market was trading around 60.30. From that point forward, both the 60.55 strike and the 60.60 strike accelerated in terms of gamma exposure, with the remaining strikes that we were tracking basically flatlining. So this was really increasing the probabilities of an end of day tag near those two strikes. And that's basically what we saw closing just above the 60.61 level on the S&P 500. Next, let's move over to the Qs. We discussed the Qs a couple of times in our previous videos this week. Yesterday, when we looked at the gamma exposure data, the 515 all the way down to the 500 strike, negative gamma exposure was much larger at those strikes, indicating some uncertainty, although we did highlight the 530 and 535 strikes were the largest positive gamma exposure. Well, it looks like we've crossed over the zero gamma exposure line today, and so the gamma effects at these higher strikes are really starting to kick in now. I think if we can get participation from mega cap tech over the next several trading sessions, even if we do have a temporary pullback, I think that'll be a great buying opportunity for a move into these higher strikes. So that's something we're watching really closely to see whether mega cap tech is going to reassert itself, reassert its dominance, leading the market to higher prices. We really need that, I think, to head back to all-time highs in the S&P as well. So in terms of the overall distribution, when it comes to the Qs, we have shifted higher now with the greatest probabilities between the 530 and 535 strikes. So any dip here back down below the 520 and 525 range, I think is going to be a nice buy the dip opportunity for the next leg higher. And I just want to remind you guys, our approach to the market is even if we are buying the dip, even if we are bullish, we are hedging our downside risk. For example, on the SPY's trading at 604. We've actually got the 600, 585 put debit spread. So if the market does take a downturn over the next couple of trading sessions, we would have some protection in the case that the market decides to sell off. And so that's going to offset losses on our long positions. Again, if you want to follow our portfolio and see all the moves we're making, check out our community Discord, link in the description below. Next, let's take a look at Tesla. Tesla really struggling over the last couple of trading sessions, especially after its really nasty earnings report. However, it does look like the sell-off could be reaching its lower limit. Just looking at this chart going back to December, we are entering into a support level. You can see the price action has been basically forming this pennant pattern, which ultimately a potential breakout of this zone would suggest a new bullish cycle. We are seeing volume coming in the options market at this 400 strike today. The 400 strike is the largest gamma exposure concentration as well. So I think if we can get back above the 400 level and breaking out of this downtrend, this goes back to the middle of December, I think that's going to be a promising sign for Tesla, basically just a big washout over the last 6 or so weeks. So in my opinion, it's still a little early to speculate, but that is a potential path scenario that you could be watching for Tesla. Watch for a close above this 400 level along with a break of the downtrend line. That could suggest higher prices into March and April. Next, let's take a look at Walmart. Not the sexiest name, but this is a name we've actually traded successfully a couple of times in our portfolio very recently. And Walmart breaking above the 100 level, big move today, up 1.82%. The thing that really caught my attention though was the gamma exposure has really started growing at the 105 and the 110 strike. We also saw big volume today, 15,000 contracts in the options market coming in at that 105 strike. I think Walmart has earnings on December 20th, so that's something to be aware of. But it looks like market participants are starting to speculate for the 105 and 110 strikes as a potential target heading into this upcoming earnings release. From a gamma exposure perspective, I do like Walmart long, especially if we can get back below or around this 100 level. So move back down into this level, I think would set up really nicely from a risk reward perspective for a long entry back up into these higher levels, the 105 and the 110 strikes, potentially into the end of February or March. That's going to be a play that we're looking to add to our portfolio over the coming week. Next, let's take a look at GLD. Metals have been on a tear for the past week. GLD was over 265 today, ultimately closing around 264.5, down a little bit here in after hours. But look at this move, a double bottom in mid to late December, and the trajectory has just been exponentially increasing to the upside. Gamma exposure between the 260 and the 270 strikes have really been strong going back to mid-December. We see continued volume coming in at this 270 strike, so that looks like the next ultimate target. And this is a name that we're constantly trading in our portfolio. We actually closed out this position today. We've been holding it for about the past month. We locked in around $1,000 in profits. This actually represents a 300+% gain. So we have a small $10,000 portfolio, which our members can follow along and learn our strategy in an easy to understand way. And so this was our post from today on our exit. But if we just go back to the entry point, which was back on January 10th, we actually rolled a previous position out into the February 21st expiration. But this was just buying a very simple 250, 270 call debit spread. So our max risk on this was just under $4 and our max profit potential was $16.03. So we closed this out just over $14, which yielded well over 300% gains on our risk. And you can see from our post, even at the time of entry, we had multiple things working in our favor. There was a potential for this resistance to break, and we had positive gamma exposure growing at all of these strikes from 250 all the way up to 265. And so this is kind of the ladder formation that we look at for gamma exposure growth at higher strikes. This oftentimes will signal interest from market participants at these higher strikes, and this is where gamma effects really start to kick in, bringing price higher. And that's exactly what we've seen play out over the last 4 or 5 weeks. So we went ahead and locked in our gains today right here above 265. But if you just look at the 270 strike, big volume coming in today, well over 40,000 contracts. Gamma exposure at the 270 strike continues to grow. And so probably what we'll do is we'll re-enter with a slightly different option strategy targeting this 270 or higher strike price. And as a reminder, we are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. We do have a few spots remaining, so you definitely want to take advantage of that while you can. You'll get access to our gamma exposure dashboard and our option flow analytics tools. You'll also get access to our premium channels in our community Discord, where we've got a ton of really great traders in there sharing their own trade ideas and strategies every single day. You don't want to miss that. There's a link in the description below for you to check all of that out. Thanks so much everybody for watching, and we'll see you guys in the next video.